So this was something that I wanted to do when I was sort of talking to the ASX about doing this event. At that time, we're working with a bunch of really cool NZ companies. And I thought maybe what we should do as part of this event is actually put a bit of a showcase, or at least put a bit of a feature and a panel session on what's actually happening in the NZ venture environment. So basically, I've obviously invited Brent, MJ, and Andrew to participate in that. So as a starting point, can I just ask all of you to give a bit of an introduction to yourselves and your fund or your business?
Thanks very much, Steve. So I'm Brent. I run Pacific Channel. We're New Zealand's largest deep tech venture capital fund. I've been going 20 years, 8 exits, average IRR 86%, and we're establishing an operation in Australia.
I think you can drop a mic after that one. How do you beat 86%?
Well, we're fortunate enough to invest into some assets that did 75x, and that's the beauty of venture investing. If you've got a portfolio and you have one runaway success, power law creates the opportunity.
MJ.
Hi everyone, I'm Maria Jose Alvarez, also known as MJ, originally from Chile, have been calling New Zealand home for the last 9 years. Started my career as a biotechnology engineer, started my own company, first spin out of my university, moved to New Zealand, and I now run WNT Ventures, which is the oldest deep tech incubator in the country. We've had a partnership with the New Zealand government on the tech incubator scheme for the last 10 years. On the back of that, I've raised 3 funds, and we're currently raising our 4th fund, fully returned the first fund and realizing over 25% of the second fund. We're a high conviction, high dedicated investor, so of around 300 opportunities per year, we invest in about 5 per year. So really keen to share more insights with you all. Thank you.
Hi, I'm Andrew Kelly. I think I'm a ring-in. I've come here because, not because I have a current fund, but because I started a fund a long time ago. It was at the time Australia and New Zealand's largest life science specialist fund. It was over 100 million. And then from there have done a variety of things in the investment space and have constantly been in the investment space across Australia, but from New Zealand for 20 plus years now.
Brilliant. So as a first step, and I'll let Brent tell a little bit about that story, but I got to know Brent about, was it 12 years ago? 10, 12 years ago, when we actually worked on that opportunity together. We actually provided that opportunity to WI, and some of the WI subscribers participated. So Brent, as a starting point, how do you, I suppose firstly I'd love to understand what is the mood in New Zealand like now in the deep tech area? And then secondly, what is your sort of process for identifying opportunities?
Yeah, I think as MJ and Andrew would also say, the mood in New Zealand is positive. We've got a very supportive government that provides incentives at all stages of the sort of value creation process, which obviously helps in lots of ways. This industry depends on that nexus of government, academia, and us as investors to make it all work. And then, for us as investors, obviously there are common things we all look for. We look for, great teams, great technology, some way of protecting that technology, because in the end, before we invest in a new matter, we're always talking to 2 or 3 potential acquirers. They are our customer at the end of the day if we are to return money to investors. And so validating that commercial interest, and I think, as you said, Steve, at the start of this day, the advantage in New Zealand is that we're small enough, nimble, but we have to focus globally. So we're always focused from the start on those corporate acquirers and what they're looking for.
And for you, what's your specific sector focus right now that you're honing in on, that you're making investments in?
Yeah, so we have for a long time focused on 3 themes. So the future of health, food, mainly ag, and the environment. And each of those had their own idiosyncrasies. For us, the commonality is we mainly focus on technology that comes out of universities and Crown Research Institutes. So we're skilled at helping build those companies with scientists, engineers, and working with the universities to make sure they do well out of those assets as well. But we're ultimately company builders, so we've had 8 exits as a firm, but each of our partners had their own exits before they joined the firm. So we're focused on bringing that operational excellence to help build these companies so they don't make the same dumb mistakes we did early in our career. because ultimately you've got to learn every time from what goes wrong. So in terms of reviews, we're fortunate to have 6 PhDs on the team. Happily, they're not just boffins; they're pleasant enough to have a beer with as well. They've actually all driven their own exits, and so I think that really helps reviewing the underlying technology, understanding the regulation, understanding the often quite complex market entry scenarios.
Very well articulated. MJ, so just for you, like as far as for WNT, what's your focus from a sector perspective? What stage are you typically investing? And then what do you find some of the key things in the entrepreneurs that you're backing?
Yeah, so like I was mentioning in my introduction, we are a high conviction dedicated investor, meaning that we're taking what we think are the best opportunities in the country at the very beginning of the journey. So I'm biased, but I do think that we're the best at that 0 to 1 spinning out process as well. So through our partnership with the government and the funds that we back alongside it, we built companies that have from a benchtop lab scale when we first invested to have multi-million-dollar brands in New Zealand, Australia, and the US, for example. So what we're looking for, kind of alluding to what Brent and probably what any investor will say, is the right team and the right opportunity. Our team also has operational experience and scientific background, but also the deep financial acumen that it takes to turn these scientific opportunities into good commercial viable products, because not all science is actually good business backable science. We're looking for a dedicated or particular return profile. So at the time of our investment, what we're looking for is 20 to 30 times our return. Power Law will say that a lot of those don't come through, but there are a few outliers. So we have companies that have returned 72 times our initial check, for example, where we still have substantial equity. In Fund 2, we have a few companies where we're over the 42 as they prepare for raises Series D, with kind of top tier funds in the US. And a lot of that comes from the time of our engagement. We're investing in 1 or 2 people and helping them grow that first 12, 18, 24 months as they prepare for Series A, but also having the ability to have the connections overseas largely for the company to then go and grow in that market, whether it's the US or Australia or the Asian market, whatever is appropriate. What it's important as a fund manager is to have the Rolodex of connections available and provide that to our funders.
How much time do you spend doing that? Because I know, Brent, you've actually built your company sort of around this kind of model as well. But how much time would you spend helping because capital is obviously required for deep tech as an area. How much time does your company or do you guys spend actually assisting with those connections and capital and so forth?
A lot. That's why per fund we make, for example, Fund 4, we're looking to make 15 to 18 new investments. We're highly dedicated. We're a small team, so overall the fund is a team of 6. But what we employed through our partnership with the New Zealand government, we get diligence grants, meaning that we get access to a pool of capital that we can then deploy to externalize that diligence process. There are people that are highly curated, and what we're trying to understand is who are the best team and the best people overseas with the technical expertise. So we build a team around the team even before we've written the check. So oftentimes that takes maybe 3 to 4 months to build that business case around it. If the investment looks like a good opportunity for us, we then write a bigger proposal with a minimum of $1 million plus as a first check investment. If that doesn't pan out, what we do is all that work built to date gets handed back to the company, which they can use to kind of grow the opportunity as they see fit. But also through that process, because we're talking about a long time frame, we're thinking about working with the teams for 5 to 7 years. So that 3 to 4 months really is gauging how are they thinking, how are they operating as executives, but also who are the key talent that the company needs to bring next. And we play that role until that kind of comes through.
Brilliant. And for you, Andrew, you've obviously seen this space evolve over the last sort of 30, 35 years. I think it'd be worthwhile to give everyone a snapshot of how you see the NZ landscape has changed from a venture perspective across all these different areas, whether it be health, whether it be agriculture, because I know you've had a couple of different roles in this, whether it be starting from the fund side and now working with some of the corporates. What's your perspective on how you've seen it change and I suppose the opportunities going forward?
Sure. Yeah, one of the sins of being around for a long time is I do see those changes. I have seen them for a while. And for your info, 25 years ago, I moved from Australia to New Zealand. born and brought up here. And I went to New Zealand at that time because I felt it had a better entrepreneurial culture. And that might sound a bit strange in this room, but something about the New Zealand economy had made many, if not most, of their entrepreneurs global from day one. They were thinking right from the very beginning about how to break into international markets, and I enjoyed that. In that period then, Steve, I guess I've seen a long and steady improvement in sophistication. It's global, it's nothing special, but it's certainly clear to me that almost every year I see pictures come across my desk that are more sophisticated than last year, that are better researched than last year. It doesn't mean there's not gaps, and my whole business is predicated on those gaps because there's still an awful lot of gaps. But I do see a long-term trend. Now, during that 20-year period, ag, for example, was the poor cousin for 15 of those 20 years. It was the golden child for 3 of the next years, and now it's going back to being somewhere in the middle. But those trends have happened. Obviously, health tech has been long and strong, but boy, did COVID kick it up another notch as well. And I think it's settling back too to a new normal. So I guess I've seen those long-term trends, and I do think that we are getting better, albeit we still have gaps.
So what is the number one focus for NZ investors at the moment, or that you're seeing that people are, or the government's focused on investing into?
I'd say, I think Brent said our government at the moment is quite supportive. I do think that as a government level, they're a little unfocused still. And what I guess I'm getting at is that I do think New Zealand, particularly New Zealand, has some globally competitive strengths, and that we three all know them, and we all probably are backing them. And indeed, the obvious one that everyone thinks of first is Agtech, but it's true that New Zealand has both a vibrant, small agricultural sector that is hugely exposed to global markets. It means we've got spin-off executives coming out of those big corporates that have had global marketing, market entry, regulatory experience in a tiny little country called New Zealand. So that is an obvious one. I think health tech is equally strong, as both my colleagues have said. I'd have to say Australia is stronger because it's both bigger and deeper in that pool. But there are certain areas, and a weird one lately is space. I say weird because I'm not in that sector at all. I don't understand it, but I have watched as New Zealand has come from zero to a little bit of a hero in space tech, and that is including one of the world's now bigger launch and space tech companies. But also breeding around it a really lovely ecosystem of 10 to 20 companies that didn't exist even just 5 years ago.
So I suppose my next question for you, Brent, is you've built a quite unique structure where you're not only a fund, but you've also got a bit of an investment bank also wrapped around your business. And I imagine you did that because you realised what MJ was talking about, how much time she supports portfolio companies, so the time was required. Give us an example of, because you obviously got it, both you and MJ got everyone's attention when you mentioned about some of the returns you were able to achieve with some of your portfolio. Best way to get an investor's attention, by the way. Just to mention about some of the achievements on the IRR front. How have you been able to do that? Give some examples of some success stories of successful exits of companies that you've worked with, and a bit of an insight into the journey with them.
Yeah, thanks, Steve. We didn't set out to be, I suppose, a micro investment bank, but we also didn't find readily in New Zealand the investment banking skills that could handle a deep technology asset. And often the businesses we're selling are still quite early stage. Sometimes they're still pre-revenue, or they've just got initial market proof. So the traditional investment banking model of selling on a PE basis that doesn't work. So we're selling our companies to corporates who are buying because of either fear or greed. They need the asset to protect an existing business line, or they see the asset as a way to enter and block competitors. So I suppose our process is from the start, as I said, we validate there's corporate interest if we develop the technology successfully. We've got someone on the board all the way through who's focused on those corporate acquirers. And a good example is a business we started in ag called Engender. It was a technology that Steve mentioned at the start around separating, for dairy farming, female-bearing sperm cell from male-bearing, so that the dairy farmers could have heifers, not bobby calves. So obvious value globally. In the end, we ran a process with US's largest animal breeding company, Europe's largest, China's largest, and Zoetis, the old Pfizer Animal Health. And just as I think an example of the power of competitive tension, the company was eventually acquired by the Dutch, but true to form, apologies, their opening bid was a tenth of their final bid. And so I think, if you don't have that competitive tension, then it's very hard to realise top value.
It's an incredible story. I didn't realise you actually went through that journey of the 10x, putting in a bid for 1/10 and then getting to that final outcome. MJ, for you, it'd be good to hear from your side as well. You mentioned one of your companies had an exit for a substantial return. It'd be great to understand the journey that you went through with that company, just to give a bit of, I suppose, perspective as to what it looks like.
So for us, it's been an interesting journey as building the 3 and now soon to be 4 funds, because we've built from the very beginning a secondary market structure into our fund, which understands that the time frame for deep technologies is often longer than this life cycle of a fund. Our priority is to do well by our LPs and continue to recycle that money. And we identify that it comes to a point in the technology innovation cycle that it's better for us to take some of that money off the table, recirculate it back to our LPs, and then they can achieve much bigger returns with that while we're still holding some equity. So what we've done in Fund 1 and Fund 2, for example, Fund 1 is fully repaid and we still have 4 assets left in that fund. One of those, we're 72 times our initial position and have consistently returned money to our investors for the last 6 years. So with that, we've also raised subsequent bigger and bigger funds. And one company that I'd like to highlight on the value and what we bring to the table as an organization is Foundry Lab from our Fund 2. So that came out from an industrial designer who was in industry working and understanding the pain points that he was facing day in and day out, prototyping parts. If you're familiar with that, it's a metal casting prototyping that takes a lot of time, a lot of effort, and by the time that you get the part returned to you, oftentimes that part no longer works. So he was frustrated, and he started developing and understanding what was a better way to doing this. Our team got heavily involved into design thinking and prototyping with him. And what resulted on the breakthrough innovation was a new wave of microwaving parts. Fast forward to now, that company is about to raise a Series D with top-tier VCs in the US, has their R&D facilities in New Zealand. We're still heavily involved with the company, and also in the US, working with large manufacturers. And us reduce the time, and their slogan is to get real parts now. So it reduces a process that took months to 2 hours to get real parts that you can incorporate into your business. So that really, to me, highlights, I love that story because it highlights, 1, the type of founder that we like to back, but 2, the work that we have built into creating that opportunity, but also knowing when to step back and let that company run forward.
Great story. And for you, Andrew, I imagine in your time you've worked with a range of different organizations that have gone through that journey of sort of starting, going through their different trials and going through exits. I'll say, what are some of the key things that you've seen that be important in helping sort of nurture those companies through the different stages?
Sure. The answer to that is an interesting one from my own history, because after a long block of time in venture, we began to focus on the far-end customer, the global corporates. And the reason we did that is because that's the answer to your question. One of the things that we found the most useful and the most problematic was that engagement and that preparation for engagement. And as we all know, and probably this audience knows, the vast majority of startups in this country and in New Zealand are first-time founders. And that vast majority all have a problem with understanding or knowing how to actually go out and do the deals globally. So what BioPacific has done in the last almost 10 years now is focus on that. You could call it as a source of investment, and it's one that hasn't been mentioned on this stage today, but that global corporate is the next natural owner of many of the companies that we're talking about today. But preparing for that can be a years-long process, is a years-long process, and having wise counsel in how to do that is proving to be very valuable to the ecosystem. So I guess the short answer to my long answer, Steve, is that we've chosen to focus on the far end of the deal. Without becoming an investment bank, like Brent was saying, we choose not to actually move into that arena. But the prep work and the wisdom and all of that side of things has been fantastic. We've also working for the buy side often now in getting from global corporates a mandate to go and search for a technology down under.
Makes sense. And I suppose in this last 5 minutes, it'd be great. So far we've covered what they've invested in to date, what they've been able to achieve with some of those investments. I think by now you would have been surprised about some of the success, I suppose both Brent and MJ have been able to achieve. Especially, we've been fortunate enough, we've been showcasing Brent over the last sort of couple of years at different emergence conference. For me, I've been fortunate enough to see that journey right from the start. But the next question is really, I suppose, what we all have on our minds is where to next? Where are you making investments? What are you looking at? What do you think this is an exciting time for deep tech, right? Between all the different innovations, whether it be from a technology perspective, from AI, from robotics. You mentioned about space. How could you not like deals in space? Apart from, it's concerning from a risk perspective, but they're cool. But where are you investing? What are you seeing what do you think how this market's going to play out over the next 5 years?
Not as cool as space, but we like sort of waste to value. I think there's an increasing focus on optimizing resources and, a couple of our existing portfolios, and we're screening for new opportunities, are doing things like taking, human sludge and creating biomethane, creating other viable industrial products like salicylic acid. And I think that's a pretty interesting area. The Europeans are strongly invested into that, and one of our portfolios has got a very significant grant from the UK government to advance that area. I also like waste heat to energy. There's a massive chunk of industrial processes. Energy consumption is just wasted, and we've got an exciting portfolio company that takes that waste heat and generates electricity. It can take very low-grade waste heat. In the areas of health, we're interested in decentralized medicine. I think it's hard for a lot of people to get to a physician. It's hard to get the appointment, and the ability to have decentralized diagnostics and treatment is an exciting way of breaking that. And we've got a number of assets in that area in medical imaging and micro blood diagnostics. And then finally in ag, the world is getting wealthier. People's nutrition requirements are more sophisticated. The demand on water and other resources is increasingly significant. So anything you can do to make that ag more efficient and less of a drain on the Earth's resources is obviously exciting. One of our companies has got a water technology that reduces the irrigation requirement by a quarter and increases production by 30% in a number of crops. So technologies like that, I think, are globally significant.
Thanks, Brent. And you, MJ?
Well, we continue being a generalist investor, but some of the things that are exciting for us right now in space, we do play a part in more ancillary services. So when we're establishing that there are some big companies already making launches, providing launches, there's a lot of satellites already taking space. There is a nation industry in servicing and provided the ancillary services to that. New Zealand, because of the opportunity, I think that it's really good at providing engineering capacity and engineering creativity. So a lot of the opportunities that we're seeing in space and in other areas are what we call hardware enabled. So there is a level of a component of a widget, which the number 8 mentality of Kiwis, I think that's really well to spark that creativity. In energy, we also see it as the conduit. We have a big play in hydrogen enabling technologies. So technologies that unlock that green opportunity for other people, so without being the sole provider. So we have a catalyst-coated membrane, for example, that is a manufacturing technique that would allow for different types of hydrogen capabilities to be deployed, agnostic of what happens in the industry. So I think it's taking for us a step back into a few of those key themes and understanding what has been the bottleneck and supporting those opportunities. In biology, life sciences, and medical devices, we also see the opportunity in the widget itself, enabled by a software component and providing better patient outcomes. And finally, what we see a big opportunity also is it's in that kind of engineering physics capacity. So if we're thinking about lasers, magnets, and photonic components, I think that there's also a very big hub of innovation happening in New Zealand. And a lot of that is attracting offshore talent that is looking to come to New Zealand because of the quality of life, because of the facilities, and the interest of government in supporting these opportunities. And we do one or like a few venture studio type of investments at the beginning of our fund where we kind of strap on and do like a lot of the like heavy work ourselves. We have one of our founders here, Leila from Hale Health as well. So different type of range of opportunities that we're providing. So really exciting times for us.
Thanks, MJ. And for you, Andrew?
Very quickly, two things. One, I guess I've been a bio guy ever since I was young, and that includes when I was a veterinarian many years ago. But what I would say is that there is a place still for good old solid products. They are still driving our economy. They're still most of our purchases. And so I don't despair at all about the trends towards digital. I think it's a great thing to watch, but it doesn't change the underlying need for people to have products. But the other one that I'd have to say, and it's a bit of a frustration as a bio guy, is I think energy is where it's at. I think energy markets globally have got one, if not two extra zeros compared to almost anything we've touched before. It's fast moving, it's critically important, it's getting government attention, it's getting philanthropic attention, it's getting stock market attention. If I had my time over, I'd be a nuclear physicist.
So just on a final, I just want to say a big thank you to the panelists for coming today. You know, I said Pacific Channel said if you speak to anyone in New Zealand, they would know who Brent and his team are. They've done incredible work. They've had some incredible success stories. As I said, it's very rare where you have someone get up and talk about, okay, here's how many exits we've had and here's our IRR. I get approached by different fund managers all the time to sort of promote what they're doing. And very few have got the kind of track record that Pacific Channel has, especially in such a hard area that they're in the deep tech and in the life sciences area. And then likewise, I was just impressed as when I come across MJ the first time. You know, I couldn't believe some of the companies they had in their portfolio, and she mentioned obviously some of the exits, but just the way, I think what I find really impressive is the way, as Brent mentioned at the start, the way the government supports all the way through, but then also how passionate these guys are about sort of trying to take their companies globally as part of that journey. And said, Andrew, I've known for some time, and has always sort of given me sort of, when I first went to New Zealand for the first time, he was one of the first people to actually meet with me, likewise with Brent as well, and give me a sort of lay of the land and what was happening in New Zealand. I think some of the most incredible companies, you know, we've had the opportunity to work with have actually come out of NZ. We had some at Emergence. They've got great life science companies, great deep tech companies, and we're fortunate enough to have these guys as panelists and to get to work with them. One thing I just realized, Brent, is me and him have really got to get on actually doing more podcasts about what's actually happening with you guys and the way you see the world, because I think the more time you spend with them, the different perspective you have about, you know, some of the opportunities that are coming from across the ocean.
Always happy to chat, Steve.
Thank you, everyone.
Thank you.